Yo, welcome in, guys. I'm gonna cover the Leopard model today. Obviously, I've already made a video before. A lot of you love this model. It's so simple to use. It's so mechanical, and it's still profitable to this day. However, my DMs have been blowing up over the past month or so with people asking me, "Does this still work? And do you still trade this?" I haven't posted about it much, but that's like sometimes like no news is good news. This I still look every single day. I look to see how many wins and losses it had every single week since I have put out this model. It has been profitable. It has always given you a positive RRR every single week. So just to go over every little thing again, I'm gonna cover the rules again, and I'm gonna look over today. I haven't looked at today yet. Like I said, after the market closes, I always do my post market video. I do my own little analysis, and then I look at the 30 seconds. So I'm at that stage right now, and just want to walk you guys through like what how I look at it every single day after the market closes. So you're gonna walk through it with me. I know there was two good ones today, but I want to look and see how the rest of the day look because one of the rules in this is it's not really a rule, but it's more of a condition that this model works best in chop. So I really think the AM session might have been good this morning because of chop. We'll have to see and see how that plays out. But just going over the rules quick. Remember, if we're in a strong trend, like a strong trending day, like we're not even getting 50% pullbacks or anything. You only want to take 30 seconds that are in the direction of that trend. Um, Another big question I get is if we have already delivered 10 points prior to getting the entry into the fair value gap, the trade is not valid and we do not take it because we have already gone too far away from the FVG. It is likely that maybe we took another high and now we are coming back down. So we do not want to do that. Another thing, it needs to be an obvious 1 minute or 30-second lower high, preferably 1 minute. Most of your 30-second highs and lows are also going to be your 1 minute lows and highs. Like, so for example, this right here would not be a high. This is not a high. So if we got a 30-second like short off of this, this would not be high because this is just in the middle of this little chop zone. We're talking this. We are talking peaks, valleys, peaks, valleys, peaks, valleys. That's what we are looking for here. We're not looking for just random wicks in the middle because you have FOMO and you want to trade. Another rule: retest. You must wait for the retest. Do not just take it on as soon as we close above, right? If we close above and you're taking it, the risk reward is not there, and your normal stop of 12 points is going to be a lot closer to the FEG than once you won it. Another rule: it must be the first FEG in the leg. So, for example, I see this one right here. By the way, I'll cover another rule here. I have not tested this anytime before 9:30 open or anytime after 4 p.m. close. So anything that you do before then has not I have not backtested and I have no data on. So with that, going back to it has to be the first FEG in the leg. So this we kind of go back to the peaks and valleys, right? We have a valley here, like we have an obvious low, right? We take a low. Your first FEG in the leg, this gives you an entry, but does it? I might have tricked you there. If we go to here and we go to here, see how we delivered 10 points first? We still get the entry and then it still delivers. That's fine. If you want to take that, that's not adhering to the Leopard trade rule to the Leopard model rules. However, it still delivers and it's totally up to you. If we all have our own risk management, and this from what I back tested, this does not always work this way. But we're gonna use this. This is the first FEG in the leg. So this would be valid if this candle did not deliver 10 points first. What is not valid is this. So you see we get right here, down. This is not valid. Why? Because this is the peak. This is the only FEG you should have been waiting for. If that makes sense. So you only want to be waiting for the first FEG in the leg to take the trade. So kind of like here's another great example. Actually, you might have got tagged in here depending on your broker, but if we go to here and we look here, you see we have an FEG here, right? We have an FEG, and then we'll draw the FEG here. So if you didn't get tagged in here, you should not. If I mean, this is an entry here, but it's the second FEG in the leg, so it's technically not the Leopard model. It still works. That's great. You know, you still deliver it. You still get your 10 points, but it's not part of this model. But if you want to use it, go ahead. But that's just I just want you guys to be successful. I put so many hours into the back testing of this that like I just want to make sure and make like everything clear of what I back tested is what pertains to this model. Um, Other than that, stick to the regular 12 point stop loss and a 10 point take profit. And let's get into today. So obviously we're gonna start 9:10. We don't care about 9:10. We're gonna look for 9:30. So 9:30 open. 9:30 open. You see, we take a peak here, right? We get a peak. We go down. We even take a brand new low. This is a good high, right? So we go up. And then obviously we take this this high too. We can then look for a possible short here, but what's the problem here? Looks like it's going to be a 10 point delivery first. So we deliver 10 points first. It's not a good trade. So that is not a model trade. There's no FEGs here after taking this low. But look what happens here. Going back to what I was just showing you guys, first FVG in the leg, right? No FVG here, no FVG along the way here. A low is swept, a little more risky, but it's still part of the model. You get an FVG, you get a close over, you get a break of structure, so this probably works. And look at that, it does. See, you get the first FVG of the leg. We do not deliver 10 points first. We almost do. 10 points, 12 point stop loss, and we deliver. So that's a winning trade right there. And at that point, we are no longer looking for a long, right? We're then looking for a short. We have now taken all of these highs. So now we can look for the first FVG of this down leg. Looking for the first FVG of this down leg. We don't see anything. So here we go. We have these lows here. We take these lows. We leave equal lows. So this is going to be totally up to the user. This is probably a rule that I need to implement because of stuff like this. Nice. These are probably nice woman equal lows. I don't lose my spot on the chart. But you see, we take these lows, we leave equal lows here. This would probably be something that like just from like a screen time basis and knowing how equal lows and equal highs are targeted. I probably wouldn't have taken it, but I'm still going to count it going against today because we did take like a valley here, right? We created the valley, went up, take a new high. So we're going to count this. So we'll count it. That's going to be a loss, right? Obviously, but it's kind of like a wishy-washy. We have nice equal lows here. Do you really want to fight against those? So let's keep moving on. We know we've taken all these equal lows now. We've taken all of these lows. You see, we get a nice FEG here, nice FEG, here, but there's no high taken for us to take this short here. So there's nothing to do here. So now another thing, this is not a high either. This is just a wick came up, tested this. I'm not looking for a short here. I'm curious if this one would have delivered prior. Looks like it didn't. Nope, it didn't. Okay, so this one still worked, but I'm going to show you guys like you can take these if you want, but this is not the model, right? So FEG formed after taking this high, but I'm not counting that as a high because that's just a random wick that came up here. So it's not really a peak in a valley. Now, if we take this high and then we get a short, maybe. But let's see. Let's keep on moving on here. So now you see we take a low Look at this. First FEG in the leg. Do we get a retest? Absolutely not. Do we deliver 10 points? I think it's obvious that we do. But guess what? We deliver ten points. Trade is invalid. So we don't care about any more longs unless we sweep below. This doesn't matter. This doesn't matter. Do we take a high? I take these highs. We take these highs. We take enough highs here for me to be satisfied that we could have conviction that the 30 point short is going to work. So right here we have a short, and you see we obviously deliver very nicely here on the model. So now we don't really take a good low. I mean, we take this low, and you see anyway we get an FEG with no entry. So nothing really doing here. Now we know we take all these highs. Now we know whenever we're not looking for any kind of long FEG here. We're looking for a short. I see this was nice. Oh man. Okay, so this is a perfect perfect here. Like filled the FEG perfectly. Some of these can get a little crazy. I've seen people use the model where if we inverse the 30-second back up, they just get out. But I mean, this is the model. So even if we inverse it, we've delivered a lot of times. You see, perfect trade here. Nothing to really talk about here. That's textbook leopard model there. So now we're looking for a good low to be taken. Um, at this point, I'm not really looking at anything. We didn't really take a good low here. Yeah, we took these, but we've dropped so much that see. So a part of this model is like you just need to know basic ICT to where we've dropped so much. This means we should come down and take some of these lows or something, right? So I'm not really interested in any long FEG here. Obviously, there was a short here. It was obviously not a leopard model short, but just a 30-second FVG. I'll probably edit that part out because I don't even know why I just talked about that. But going back, FEG here would be the long. We obviously did not get the setup right. So now we took these highs, these highs, these highs. We've gone 50% back up of this range. If we got a 30-second short, I would be inclined to entertain it. But it doesn't look like we get a 30-second short, right? And then obviously we don't take any good lows here. This one works for a regular FVG. Is it the leopard model? It's not. We don't take any good lows, and we leave equal lows down here. But so nothing doing here, nothing doing here. We do take these highs. You see, we get a 30-second FEG here. Do we get an entry before 10 points? Does not look like it. Nope. You see, we deliver 10. Trades invalid. We keep on moving on here. So next thing, I guess I would count these. I would count these because there's like a lot of LRLR here. So there is liquidity build up here. We hit 50%. We filled in this. So if we got a short here, I would probably take it. But do we get an entry? Nope. So now I'm looking for, okay, we take these lows. If we get any kind of FEG to the upside, I am going to take it. So you see, I'm just making sure we don't get anything prior. Okay, to this one. So this one, failure. Like this is part of the model, right? There's going to be losers, unless we deliver 10 first, but I do not think so. So you see, another thing that I should cover, going back to the rules quick. Even if the candle that makes the FVG goes 10 points prior, then from the lower candle, the trade is still invalid. It doesn't matter where this one goes. Is that if that one delivers 10 first, then the trade is still not valid. So this one we have a loser here. So at this point, you see, we go down, we take a low. At this point, we're looking for any kind of longs, right? Because we know the shorts are still good. We'll keep looking for 30 seconds to the upside because we keep sweeping lows, right? And then we keep sweeping lows. We don't take anything obvious over here, but we're still taking all these. So we'll look here. You see, so the first one we don't get an FEG here. We get a tiny one here. Another thing, the size of the FVG does not matter. So here we make up for the losing trade and we get a winner. So winner, winner there. So at this point, we take these equal highs. We take these highs. These highs don't really matter though. This is more of your peak that you took. If we get a 30-second down, we'll look to take it. Let's see here. So it looks like we might have another loser on our hands here. So it looks like we do. Yep. So you see, and then we have a loser. We don't. This was the first bearish FVG that was formed after taking these highs. So there's a loser. All right. So now we take all these highs up here, right? So now we can look for an FVG to the downside. So looking here, I see an FVG here. Boom. Your FEG would go here, entry here, and then I think that's obvious that one worked. So draw it over there. So now we sweep these lows. Looks like these lows get swept. Um, so now I'm looking for a potential long setup here. Let's see here. This gets a little messy here. So I guess I'll look at this one. See. Let's see if this one delivered 10 or not. I'm not even sure. So this one plays out for a while because we just end up in a bunch of chop. It ends up being a loser. That one's like a little more 50-50. It's totally up to users there just because of like we're getting into the chop here and we're kind of wicking back and forth. Totally up to you. We'll count it as a loss just to see how the day trade plays out here. Um, Otherwise, you could have taken this one after taking these new lows and then taking up for 10 points. This comes up to user discretion, really. So since if we pretend that we were in that trade the entire day, at that point we're then looking for a long. Your next long setup would have been here. This is way more than 10 points, I believe. Maybe not. We're pretty zoomed in here. So actually, no, we did not deliver 10 points first. You see, we hit the FEG. Boom, boom, delivers, and we get the winning trade back here. So these two pretty much cancel out. You see winning trade there, and then at this point, what are we looking for? We took all these highs, right? We're looking for a short. Look at that. We get a short right here. We look down. We get our entry 10 points. Boom, boom. At this point, we don't really get a bullish FVG to the upside. Um, as well. We take all these lows. We do not take that low. We take these lows though. So at this point, I'm looking for an FEG to the upside. Um, you see, we hit this one right here. This one counts. Let's go over here. Let's get the rest of the day kind of drawn in here. Draw this up to here, and then obviously you see we get a winner. So there is a winner. So at this point, we're starting to take some highs. We take these highs. If we get a bearish FVG to the downside, which it does not show, that's the thing with this model. If we get an FVG, usually means we're gonna get a 10-point move. If we're just sitting here chopping like this, we usually don't, especially here. Like, look, you think we might get an FVG here, giving us a down move, maybe be a 50% down. We don't get it. We don't take any good lows here. I mean, you could argue these lows here, but those are those are like too close for me to like be content with. So I would not take that. We didn't even get an entry here. I just want to show you guys like I'm not cherry picking these trades whatsoever. Like this is even if we got like an entry here, it just would mean it would not be the model. So next thing, obviously we take all these highs, we take a bunch of highs to the left. A little tiny FVG here, and we do not get the actually no, sorry, I don't know why I drew that one. So it would have been this one, and then you see I don't believe that stopped us out. So this would have been your entry. This would have been there. There is a lot of annoying trades with this model that would have sit here and do this and not deliver. I mean, it takes that they can take a bit, kind of like the loss that happened back here. You're in this trade from 12:25 all the way to 20 minutes. I've been at some that taken 45 to an hour, but It's just a mechanical model, stress free. You just let it go. Um, the next thing, obviously, you this wouldn't have been a long. First of all, you didn't even take really any lows, but and you were still in this trade here. So and then obviously there's a nice long here, but was that the model? It's not. So coming into 2 o'clock thing now. So another thing, when I back tested this, AM session tended to be a lot better than the PM. The success rate really started to drop off going into the afternoon, especially after 3 o'clock. So I tend not to trade this too much after 3 o'clock. For this purpose and stuff, we're still going to check out 3 o'clock. So let's look here. So now we're at this point. We're looking for we're looking for a short, right? We've gone all this way up. You could even argue that you wouldn't take this short unless you had like a reason to be like bearish. But for purposes, I'm going to count it because we take all these highs, we get a 30-second FVG. We're going to look for 10 points. And that's just like the more you trade this model, and then you see we deliver, you'll start to like get a screen time and a feeling of knowing which ones are going to work or not. Like you just get a feeling, especially if you're a more experienced ICT trader, and you can combine this with higher time frame PD raise or something like that, then it gets that much better. So at this point, no, I'm not looking for, I mean, we did take out these lows. We are delivering from higher time frame PD arrays here on the 30-second. You, I mean, it's totally up to you, but it's not the model, right? Just none of these are like good lows. I want noticeable lows. So going down, you see, we don't really take any lows. Not interested. I'm only interested in probably shorts here with this model. But at this point of the day today, remember we were so bullish, so I would not blame anybody if they didn't take any of these. But for back testing purposes, this is why it just goes to show like you need to take every trade. So I also need to emphasize that I see a lot of people that they'll either take two losses and they're done, or they'll take two winners and they're done. There are days where there are more losses than wins with this, but if you're not taking every trade, you're not going to get the same results that I back tested with. So, for example, like on Monday, you could have 8 wins and 10 losses, but Tuesday could be 12 wins and 5 losses. You're green on the week, but you stopped trading on Monday, and maybe you took a loss on Tuesday and you stopped, and then you missed out, and you could be green. You have to take if you're gonna use this model, you have to be like dedicated to trade it all day, at least in my opinion. Unless you can figure out a way that where you can distinguish which ones are for sure going to work and which ones aren't. So um, we'll keep moving on here. So obviously we take this high. Um, here's a 30-second short that works. And at this point, I mean, we're high. I mean, shorts are justifiable. I think we took some hourly equal highs and stuff up here, so I mean, it's possible we get a short. That's going to be a winning trade there. At this point, I see we take these lows. I would count this as a valley. Um, so we don't see any FEG, right? Any FEG, any FEG, any FEG. So we finally get an FEG here. If you look here, we'll see if we got stopped or if we delivered. Looks like we delivered perfectly back up to 10 points here. So then at this point, we're looking for a short, right? Because we've now taken all of these highs. We don't want to look for any longs now because we've taken these highs and we haven't taken a low. So you see, we get an FEG here. I'm gonna draw all the way over. I'm not sure what happens here. So you see, we delivered 10 points first. That's not a trade. Coming into 3:30 here. Remember, these trades are all after three. Three winners, but I just don't always trust the 3 o'clock move. So coming in here, coming in. Don't really take any good lows. Um, Nothing really strikes me as like, oh, this looks good. I would say Let's say all these highs is a nice liquidity pool. We're delivering from this 30-second FVG. I would take this as a short if it doesn't deliver 10 first, which it does, so it doesn't count. Um, we go back, we take this high, and then we get a. We don't take any lows here for. We do take this high here, so this is a short. Take a short. Looks like we might get stopped here. Okay, so that's gonna be a loser. Um, let's see. So we got the entry right here. So we go back up, we take a high, and then what? We go down, we take a new we take a high. There's no FEG, no FEG. Our FEG would have been way down here. Again, this is a sketchy trade, and it's going into the closing hours. Actually, I'm not even going to count this. Let's see if it works. I don't even know if it worked or not. It doesn't work. Look, you're still in this trade here. So going into close, I wouldn't have taken it. Obviously, and it's a big FVG that took some lows already, so it's just a sketchy trade. But I'm gonna add these up here. We'll see what today ended up being. There's a lot of trades today. All right, so first trade was a win. That's one win. 1-1, 2-1, 3-1, 3-2, 4-2, 4-3, 5-3, 5-4, 6-4, 7-4, 8-4, 9-4, 10-4, 11-4, 12-4, 13-4, 13-5 for today. So 13-5 for the day for the Leopard model. Great RR. You got, let's see, it's probably just under 70 points because you have to remember all the losses are 2 points more than the wins, so you have to subtract the couple losses there plus commission. So we'll say right around that 70 point ballpark on MNQ or NQ. So I just want to go over that with you guys, kind of show you what goes into my mind when I'm looking at these trades. If you guys enjoyed this video, like and subscribe below. If you like me doing these, comment below. Let me know that you want me to keep on doing these, and I'll just make a complete playlist just based off the Leopard model here. So with that, much love, guys. Hope you guys tune in next time, and we'll see you guys soon.